In today's video, I'm going to teach you how to read Keepa chart. If you've ever wondered how to quickly judge whether an Amazon product sells well, holds a steady price, and has manageable competition, the Keepa chart is your best friend. I'll walk you through what you're looking at and how to turn those squiggly lines into confident decisions. Start by opening the product on Amazon. Scroll down the page until you see the Keepa chart embedded under the listing. If you're using the Keepa browser extension, the chart may load automatically on the product page. Give it a second to populate. If it looks crowded, you can toggle elements on and off using the legend below the chart to keep things clear. Let's decode the colors so the chart makes sense at a glance. The green line is the sales rank, often called BSR. This tracks how well the item is selling within its category. The blue line is Amazon's own price when Amazon is a seller on that listing. The red line shows the buy box price, which is the price most customers see and purchase at. The orange line represents the lowest new price from third-party sellers, and the black line reflects the lowest used price if the product has used offers. The green sales rank line is your most important signal. Look for downward spikes. Those quick drops indicate a sale or a burst of sales. More frequent drops generally equal more sales velocity. Sparse or flat drops suggest slower movement. Hover over points on the line to see dates and rank values, and remember that rank is category specific, so context matters. Next, evaluate price stability by focusing on the red buy box line. A steady red line suggests predictable margins and fewer surprises. Wild jumps up and down can mean price wars, suppressed buy boxes, or unstable demand, all of which add risk to your forecast. To gauge competition, check the offer count, which you can find at the top of the chart or in the Data tab. A rising number of sellers usually points to tighter competition and potential price pressure. A declining or consistently low count means a better chance to win the buy box and maintain margins. Use the time range controls to spot trends. Switch between 1 month, 3 months, and 1 year. Short ranges help you see recent movement. Longer ranges reveal seasonality. You're looking for consistent pricing and regular green rank drops across time. Finally, check whether Amazon is on the listing by watching the blue line. When Amazon is in stock, it's typically harder to compete. If the blue line disappears for long stretches, Amazon isn't selling, which can open a better opportunity. That's how to read a Keepa chart with confidence. Pause, practice on a few listings, and these patterns will start to jump out at you.